What is up, Trader Gang? This is the November 2024 AMA, and this is going to be one of the last AMAs of kind of the Patreon model before we all transition. And as you all know, I need to keep this to a time limit, but we are going to speed run through every question and we're going to cover a lot of stuff. And also, hope you all have a wonderful Thanksgiving. This has been a very active year. It's been a tiring year, probably for many. So worth giving yourself some gratitude, some time to relax. And with that being said, I'm going to speed run the questions on Patreon. Interrupt me if anything comes up that doesn't make sense. And then I'm hopefully, if I speed run well, we will be able to also open it up to questions. And I'm going to try to not get too lost in the weeds with some of this stuff. So the first question was from Guri. And this was an important one. And one thing I'm going to love about when this course comes out is so many of the questions you guys ask, like I already pretty much cover on a lot of the videos that are just going to relay a lot of these points very professionally done. And so one question was, why do you prefer only taking the break of level and not anticipating the breakout and getting in as it retraces back? MSTR this week, I understand that it saves you from a lot of trouble. And so Guri mentioned a good point, which is when you get involved prior to the breakout, your risk reward in theory is better, but not necessarily the best probability. So a lot of people conflate the two. They think, ooh, tee-hee, I'm going to be, let me pull up a chart for example. And Guri mentioned MSTR, although I'm not certain what specific day. I can maybe take a guess. So I'm sure it's probably we're talking the crack day. So the thought might be, why not get involved like right here ahead of that break to lows? And he brought up that your probability is impaired. And so one of the videos that I get into is that expected value drives every single decision we make. Like no matter what I say, like any type of rule or generality always comes second to the expected value. Like that's the truth. If I say like, and I think I mentioned this in one of the videos, like if this is the true level and I tell you to do this, but then you provide me with data where it's like, oh my God, Lance, like the exact optimal, like if you provide me with data that tells me that anything I do is wrong, I'm 100% going to change my mind and always just trust the data and the expected value. So the reason why I tend to wait for the level, though, is from my personal experience and from my style of trading, I find that waiting for that level is where the best expected value is. So there are probably some rare exceptions where if, for example, there was some really, really large offer, or if there was like a setup within the setup, or if something changed where for whatever reason, I think the expected value is better anticipating rather than waiting. Like sometimes another reason why I might position ahead of a breakout or a breakdown is based on liquidity. So let's say that there's really not much liquidity on the bid here. If I want to get up to say 30,000 shares and I think I'm only going to get 5 here, I'm not going to be able to get all that and I might lose a ton chasing down. So that's where I might slightly position again. But in general, I'm just trying to let expected value dictate. And so he also mentioned getting in as it retraces back. And so again, I don't know exactly what point we're referencing, but maybe we're even talking about a retrace like something like this. So in general, the reason why I don't want to necessarily rely on retraces is because it's my opinion from, again, not just my opinion, from my data. And again, your data could be different, but my data tells me that my absolute best trades, once that level breaks, it's gone. And so look at this. If we call this level 512, within 2 minutes, we're $12 lower. And within 10 minutes, were $40 lower. There was no meaningful retrace. You know, even this little bounce here, we don't get anywhere close to 512. So in my personal view, backed by data, the absolute best trades are gone. There is no ability for me to get more on the retrace. Oh, so Guri said I meant the VWAP bounce later in the day. Yeah, so I mean, I'll definitely, and I don't know VWAP on this chart, but I'd assume it's roughly around here. I might be willing to reposition against VWAP on some of those retraces, and that's fine. And so again, a lot of that, and Guri's saying it's 490. So I was actually right, just kind of eyeballing it, which is funny. But so again, there's definitely times when I will, like, I absolutely, and I actually did some of this where it's like you'll be short. So okay, I mean, I wish I did have some of my execs. There's no chance I'm going to be able to set that up now. You know what? I'm going to write myself a note. If I forget this, can you guys remind me to just post? I'll see, like, I haven't done this in a while, but I'll see if I can get my chart, my little arrows on the chart for this. But long story short, I essentially was, shorting some into here, kind of against these highs. And then, again, this was the main spot. And so as this falls, I'm lightening up. Then I'm reshorting a little bit. And so here, I believe here I was even long at this point. And as we bounce into VWAP, I definitely don't mind shorting into that big picture. But again, the most important thing is, like, if your data shows you it's good expected value and it works, you want to trust it. Beyond anything I ever say, if you have data to back up what you're doing and it's positive expected value, that's great. So I don't disagree with anything you said there. Another part of it, anxiety around the open. Me and my friend do feel overwhelmed around the open on these big days. So congrats on being human. Congrats on being a discretionary trader. That is part of the advantage of experience. Guess what? When Tom Brady is in the Super Bowl and making his 12th appearance, I have no idea what that number is. When he's in the Super Bowl, part of his competitive advantage is he's been there many times. He's won many times. So he has way less nerves, I would imagine, than the average quarterback. When you've been trading, I don't know, 15-ish years like I have, one of my competitive advantages is I don't really feel that so much, or certainly way less. And so, as with many emotional things I say, it's not like we're humans, right? We're always going to feel this stuff. To some degree, I still feel this stuff. But what it really is, it's not that you're going to ever turn it to zero, and nor should it be. Like, a lot of emotions are useful, but with experience, we can really dial that stuff down. And if you're feeling like anxiety, I do think, like, you want to make sure you're breathing, even like jumping up a little bit, just getting kind of the wiggles out. Like, I also think something that's weird is a lot of times when we have that stress response and that, anxiety, we're meant to be moving, but obviously we're day traders, or traders in general. We're sitting in a chair. So I think even if you can do, like, a quick little jumping jacks and just get some of that energy out, it helps. But again, like, we're human, and I think that happens. So that's just going to be part of how it is. Then there was another question: how do I identify chop and low volume beforehand, after earnings or news? I don't think you necessarily need to identify stuff beforehand, but just when that happens, listen to it. Like, once I did some tweet where, like, once this kind of retraces like this, the odds of this spending, like, most things off the open will make a couple legs if it's trending, but most stuff midday, like, the most common pattern is leg, consolidate during the afternoon, continuation leg. We saw this with SMCI, right? This wasn't that dissimilar from that SMCI crack day. So many people will chop themselves up in here. So I don't mind scaling into a reshort, but I don't want to be short cover, like, and just churning myself, short cover, that type of stuff. But I don't mind working into a short big picture. Then as we start to hold, reassessing, but expecting that the bigger move, like I do. Oh, and here's an example. Like, even though we're still technically in no man's land at around this 440, I don't necessarily mind starting to position here just because we're starting to really consolidate. We've got the moving average coming down. We're making lower lows and lower highs. So I don't mind, Guri, there's an example where that's not necessarily the worst idea to start to position ahead of the actual lows. How to detach yourself from P&L and emotions. We're human. Like it's always going to happen. I think part is just focusing on the process. And the more you train that, the better, right? Like over time, you don't let your, when it's day one and you're a trader, like you're like, woohoo, I made $50 and you're overjoyed, or you lose $60 and you're like, oh my God, I'm never going to succeed at this job. But as you get more and more experience, you start to just tamp down on that and be like, okay, look, I get it. It's part of the job. So the more you just focus on improving, some emotions are always going to be there and normal, but you do kind of want to, like, with experience, kind of calm down on some of it, just so you can focus on the process. Rajan said, bit of a loaded question. Daily routine when you were a rookie putting in the most hours. What and when you did things during the day, and then what those things might consist of. So if you Google SMB Capital daily routine, you will on YouTube or whatever, you will see a video where I lay out my full daily routine. For Magnum Opus, I also have a video that covers that. But like, what I would also say is more important than what my daily routine is like you doing the independent thought to figure out what your ideal daily routine is, right? Like if someone, if David Goggins is waking up at 4 a.m., like that because he's going to bed at 8 p.m., that doesn't mean I want to wake up at 4 a.m. If someone is really, really weak in reading the tape and they don't have any skill set there, they might need to really, really work on that. If somebody hasn't worked on a lot of their chart analysis, or they're still learning different things, like there can't really be one answer to routine, just because for so many people, you're going to be at different stages, different stuff. So like I always urge people to ask, like, what is the highest return on investment of your time each day? And that's where you should really be focusing. Oh, thanks for sharing that, Darius. Okay. So Ricky Bobby, wonderful name. It helps to hide P&L. So I actually don't love the idea of hiding P&L. Like I think P&L needs to be visible and just used as an indicator. Like the issue with hiding P&L is at some point you might be one day trading 6 positions, 8 positions, 10 positions. You really need to be able to see when something's working or when they're not. And there's times where you can, like on the really big panic days, if I have 10 different positions, I can tell the breadth of the bounce or how things are working by my P&L. If that starts to really, really jump, then something's changed. I also want to know if my main position's working, but my P&L is not going anywhere, something else is hurting me. So I do think like, I do think you don't want to hide P&L for various reasons. And it's not really about hiding it, but just kind of like using it as a useful indicator. Bookmap provide any aids in reading the tape? I'm not familiar with Bookmap. Is that the thing with the charts and the volume?
Yep, that's the thing. And I could be wrong, but I think they're missing like ARCA or something in there. Like there's literally like some data that you don't get. So I think like
they only have Nasdaq and EDGX.
Yeah.
I mean, if you only have 2 venues and not all of them, I mean, that's going to be super, super constrained. I mean, like most of that stuff, it's like a visual representation of just kind of stuff that you want to be just learning to process with your eye. Not that it's not useful. Well, I mean, if it's missing a lot of the venues, then it's definitely not so useful. But I do think a lot of this stuff, it's like you want to just be using your old school eye and processing this stuff. I will have videos on reading the tape over time. That's been one of the topics I am most not evasive, but most postponing, just because that is some of the most time intensive work to ever make video wise. It really requires a lot of time. But I do think using your eye, and I'll help you guys find what to be looking for, is going to be better for some of that. So then there was a question on the lunar breakout around 12 on 11/21. So lunar 11/21. Oh, that's going way back. Or no, that's not way back. That's a couple days ago. $12 break. So first, so anytime I get a question, I want to always also check the daily context. So this question was on lunar on 11/21. And so when I look at this daily chart, let me get this chat out of the way. When I look at this daily chart, okay, we're in an upward trending stock. Certainly we've made some incredible moves. This was a big gap. We held, we consolidated, we broke out. Then we had a big retracement. That is a brutal candle. Not crazy volume capitulation, but yeah, that hurts. So then when we're talking around 12, so for me, just based on the daily chart, this is smack dab at the 50% equilibrium no man's land. So just based on that alone, I'm going to enter this a little skeptical. But again, you know, the intraday is the most important for this decision. So I'm going to check this out. So blah, blah, blah. So around $12. So like, I don't necessarily mind.
Lance, it was 12 p.m. So around the 13.
Oh, 12 p.m. Oh, sorry. 12 p.m. Oh, so you mean here? Got it. Yep. So thank you for correcting me. From an intraday perspective, I love this from an intraday, right? You know, we kind of have this, we break out over kind of that double top there. We make a really, really nice leg. This is a very beautiful consolidation to me. I really like the distance to the moving average. Then on this bar, you know, we get a lot of volume. So from an intraday perspective, I actually really like this. From a daily perspective, this is kind of smack dab in no man's land for me. The best trades will be when both of those align. If we could get this type of pattern on the daily and the intraday does the same thing, like that's awesome. But, you know, to your credit, you said, was it valid as just, actually part two, you even beat me to it. You know, exactly what I had said. Was it valid as a single? And so look, when the daily is kind of no man's landy, which spot on, I agree with you before I even read your second question. That's just going to simply affect how aggressive I might get and how big my expectations are. So as an intraday trader, the intraday chart for an intraday trade is going to be the most important. So this really good intraday setup supersedes the daily chart. So yes, this is something I would definitely consider taking for, as you call it, a single. Really good question and good points, and 100% agree with that. And again, maybe I just hold this to prior bars and get out there. Maybe I give it to the moving average. And this is the type of thing where if the daily chart aligns and the daily chart's amazing, I'm going to be much looser and more willing to give it to the moving average than I am if it's just a little single, and I'll probably use 2-minute bars. So in this case, I probably would have used 2-minute bars or something like that. But that's a very good question. NVIDIA 145. Do you have a day for this? 145 breakout in the pre-market.
It was the day that it broke 150. So that day, yeah.
I mean, that's just a money. I can already tell that's just a money intraday. Yeah, that's fantastic. Or not intraday because it's pre-market, but yeah. Below the after hours high. You mean just from the prior day? Or is it? No, it's not. Or hold on. Uh-oh. This wasn't below the after hours high.
I think
Or did you mean all-time highs?
Let me zoom out on my chart 1 second. I think if you go back a little bit further, it would show it. Yeah,
Oh,
right.
I see. Okay. Oh, I see. So again, like this is just a totally awesome setup. So much like with that lunar, I mean, these are really good questions. Like much with that lunar example, where that most recent chart data and that intraday data is going to supersede and outweigh my mediocre view on the daily. this being so tight and such a nice consolidation is I'm gonna go for that. Like that's gonna supersede the fact that yeah, you know, prior day after hours we're a couple points higher. 150 breakout that happened. You know, the 150 this is way more appealing to me than the 150 for what that's worth.
The 150 was a big daily breakout.
Yeah, let me check this. Yeah, I mean that's still given the daily, that's probably appealing enough for me. And stuff like this can really get momentum. Yeah, so I don't mind that at all. You know, that intraday prior at 145 was even better. Okay. So Stan had asked me about Arval. So truth be told, actually, let me see some of these chat comments real quick. Am I missing anything? Oh, you're welcome. Okay. So Stan had asked me about Arval. Truth be told, I know there's like indicator, thinkorswim, Arval. When I use Arval, I'm just using my eye. I don't really, I'm not using the actual indicator. I'm not looking for any specific amount. Sometimes I'll just simply say like, okay, how much volume are we doing versus how much we did off the open? So I'm using it very qualitatively. I just want to make sure on the levels I care about, volume's really, really increasing and that volume's staying high and stuff. So no, I'm not using the thinkorswim indicator like that at all. Actually, this might have been one of my favorite questions. This was from Gavin. What are your thoughts on the Stephen Dux style of trading? Stephen Dux is a trader in California. I happen to know him, super nice dude, authentic dude. He is a real trader that makes mucho dinero and hits some really big home runs. And so Gavin was asking, takes only a few setups per month that tend to have the highest odds associated with them. On top of that, do you think that style of trading is or could be more or less beneficial to retail traders specifically? So I would say Stephen Dux trades, he's kind of at a point where he trades pretty similar to me, where it's like, I do think he trades like most days. I do think he might even trade every day, but for the most part, he's making like 95% of his P&L and probably 5 ops each year, 10 ops each year. Whereas me, I'm not trading 95% of the days, but 5% of the days I'm doing like 100. And so do I think this is beneficial for retail traders? I absolutely do not. I think what Steven does and what I do, that's only really attainable at the very, very, very elite levels of trading. The best analogy I would give, and this came up with like Kyle Williams, like if you want to make the most amount of money in poker, do you only play aces? Who wants to answer this? If anyone. Roberto, hit me.
You know,
Yes,
I mean,
Oops,
yeah,
sorry.
go, Roberto.
if you want to, you said in an interview, so because I'm been studying you, I have an edge in these answers. Let's see. So you said that if you want to play and make the most, and you have one edge and be a master of that edge. So in the poker analogy, yes, aces, only aces. But if you want to be consistent, to have less variance, less volatility in your P&L, you want to play, yes, 10K, 10Ks, 10 queens, and hands like that. Because there's money to be made in those hands as well.
So here's the thing, like for most beginner traders or retail traders in general, like you've got bills to pay. You've got opportunity costs. Most traders need to make money most months. You can't just sit around not playing most hands. So like the way to make the most money in poker isn't just by playing the aces, because then you're leaving money on the table and there's kings, queens, jacks, tens, all sorts of stuff. And you're also missing, as Roberto just said in the chat, reps, and reps. And like, so I think first of all, you can only attain that level of skew when you have a lot of cushion, right? If I don't make money trading for 4 months, I don't care. I'm able to bet much bigger over time because I have that P&L cushion, right? I don't like the other thing too, by playing multiple hands and just trading consistently, your overall variance goes down a ton as a trader, right? If I'm only trading one trade a year, if that goes wrong, you know, I'm going to be negative on the year. If I'm taking tons of trades and playing tons of hands, my variance goes down. So like, I think what Steven Dux does is like fine for him at his level, because when he does, I mean, he could easily be retired many times over. But I don't think it's ideal for most people, because you miss out all the reps, you have worse variance. And the other thing too is, and this is an important point I made to Kyle Williams, like all those hands, the tens, the jacks, the queens, the kings, when you win over all those extra months, all of that P&L then allows you to bet even bigger when you do get the aces. So it's really not optimal for most people. Yeah. But very good question. So Sean is always present on these.
Can I just ask one quick thing on the subject?
Yep.
Like, have you feel like going like semi-retired or whatever? Like, have you lost like a little bit of your flow, I guess, or like your ability to read the tape? Or, you know, I always feel like when I go on vacation, like I hate it because, you know, I like to be in my flow state. I like to be like in front of a screen and just having like the ability to, I don't know, process information like, you know, quickly. And it feels like when I'm taking like, I don't know, like 1 or 2 weeks off, you know, it takes a while to get back to it. So I'm just wondering, like, if you're not trading for a while, like, have you lost a little bit of that, you know, mental ability, or not really?
Well, I mean, I think the kind of faster and higher frequency your trading is, the more kind of rusty you might be. And so like I think that's pretty common. But what I would also say, the longer and more thousands of hours you do something, the less like rusty you get. Like, here's the thing is, if I take a month off golf, which I've not held a club in probably a month, when I swing, I am going to totally suck ass, right? If Tiger Woods were to take 2 years off golf, I'm sure his swing would be exactly the same, because he's done a million zillion reps, right? If you take a PGA Tour player, they can take 6 months off golf. Like, yeah, they're going to be rusty by their standard, but it's going to be like really, really good. And so I think the more years of experience, like I remember when I was a new trainee the first couple years, like even over the weekend, I would feel a difference Monday from Friday. Because Friday you've been doing it 5 days straight. Monday I'd come in and I'd be like, holy shit, this feels all funky. Like I'm slower on the keys and everything. Once you're 10 years in, it just doesn't, you don't feel that as much. Then I would also say for the trading that I do now, it's like, I'm not doing a lot of what I used to do as a full-time professional. I'm not doing the breaking news trading. I'm not doing the super fast stuff. So it's like, I don't really find it affects me. And I'm also just playing to my strengths more, right? Like I know my limitations. I can't do the breaking news I used to do. I know what my strengths are though, where it's like, I feel like I better understand market dynamics and I better understand some of these big picture moves and how to capture them. And I think my skill level in the price action stuff, like the MSTR, like all the trading I've done this year, I think my skill level in that is actually the highest it's ever been. But then obviously I've like greatly recessed in other areas. Like if you try to get me doing some of that old stuff, I would definitely be rusty. Let me see. So then, oh yeah, back to Sean. So how do you account for partial take profits in your overall EV calculation? Yeah, I mean, I don't have some perfect answer for this. Let me use MSTR as an example. So, and I've got videos coming out on this too, but it's like, okay. Nothing's ever perfect, right? Like we never know what expected value truly is and everything else. Here's what I do know. When this breaks, the expected value here is really good. Let me just X out of this chat. When this breaks at like 512, it's really, really good. When we go to 590, 512 to 590 like that, the expected value has definitely become less positive. I still think it's positive. I still want a position, but I definitely want less. And so a lot of this becomes kind of like a qualitative feel thing. Like I need to be prepared that at once at 5.9 or sorry, at 490, we can retrace to 502, 510. We could even go back to 520. So when I'm 20 points in the money, that's way different math than when this was just breaking. When this makes this kind of second mini leg at 470, that's also like, that's even less, the expected value is even less positive than before. So I don't have any like super perfect rules. So it's a lot of that ends up being qualitative, which is not kind of what people want to hear. But like, so that's where like, let's say I'm short, and I'll get to you, good old Ricky Bobby in a second. But if I'm short, let's call it 1,000 shares, maybe I cover, 300 here. Maybe I cover 400 towards there. Then maybe I use prior bar highs for the other 300. It's not going to be some perfect answer, but a lot of that is refining over experience and just kind of roughly your estimations of, hey, how far have we gone in straight line? Ricky, hit me.
For let's say these breakout or breakdown trades, sometimes I feel that the expected value is also like a function of time, right? It's from the open, usually you get your best entry within the first 5 or 10 minutes, and the expected value like dwindles as a function of time. Unless we start looking for, say, like the alternate trades, like the rebound trades back to the mean, the reversion back to the mean. What do you think?
I think a lot of that depends what type of trade. Like for example, not that this bounced super clean, but like as far as a long reversion, this seemed like, oh my God, like the odds of us having a bounce from here is pretty damn high. I would say the first 10 minutes seems a little bit quick. Like I think most of the best moves will probably, I don't know. We've seen a lot of stuff this year, like NVIDIA SMCI, where it's more than just the 10 minutes and it takes time to, you do that opening drive, then you roll over. The most important thing I'd say is really just like, what is the chart telling me? Like if the chart sets up well, I'll pay attention. I do think though that like midday, call it, I would say I mostly view things getting slower. I would say from like 11 to 2. I'd say 11 to 2 is where I start to be way more cautious. But I like if this MSTR had kind of sucked, really done a flush off the open, rolled, then like consolidated, then rolled, that I would have liked that even more than this. Like from an intraday perspective, I thought this setup was maybe like a B minus. The daily is like an A plus. But this intraday itself here, I really didn't think was so incredible. So there were better ways this could have set up. And like time is definitely a factor, but I wouldn't constrain it to just 10 minutes. That seems a little bit quick to me. Does that kind of make sense? And again, of course, it depends also the type of trade. Breaking news can happen anytime. If some big headline happens at 10 a.m. versus noon versus 1 p.m., 2 p.m., that makes no difference to me. Breaking news time of day is totally irrelevant. But I would say like, the first half hour, I would say is when you can get stuff really kind of cracking. But NVIDIA on one of those top days, it definitely did its little, drive attempt, then failed, then did the big roll, I think around like 11. Not that I we'd have to look back.
Hey Lance, just one
Yo.
quick thing on that first question I asked. So I was really kind of asking because I've been like really trying to get into like calculating EV for all my trades. And one of the things that in my practice, what I was kind of confused about was that like, okay, when I'm like looking at the EV from outset, right? Let's say I have like a $5 profit target and a $2 risk or something like that, right? And I calculate the EV and whatever that EV number comes out to, right? But then if I start taking like, let's say a partial take profit at $2 and then another one at $3.50, you see what I'm saying? Like the EV isn't like the same as when I originally calculated it. So if I'm making decisions based off the original calculation, but then I'm taking partials along the way. Like how should I be thinking about that? Am I thinking about that? You see what I'm saying?
Yeah, I get exactly what you're saying. So a lot of this, it ultimately is just kind of like what makes trading so tricky. Like when you short here, you really have no idea how this is going to unfold. So it's like, I don't generally have price targets just because I don't know how this is going to unfold. And like, for all I know, this could just go at a slope of -1 and fall 300 points, and like I have no reason to cover whatsoever and I'll just hold. So for me, like in this moment in time, like it's kind of hard to really know, but like I do know like, okay, my stop, if I wanted to give it to prior bars is roughly 10 points. If I want to give it to the highs of the day or even pre-market, like if I give this to 550, that's, call it roughly 40 points or so, a little bit under. Then what I'm really doing though is I'm taking a look at the daily chart and how overextended we are. When this stock was going up, 6% a day, 6%, 7%, like you could easily from experience see this going at least $40, at least. So, and when this cracks like that, I also know my percentages on a daily pattern like that are better than 50-50. So I know it's probably going to be a really good trade, but like you're saying, I don't really know how it's going to unfold. And like, if I short here, hoping to make at least $40, is it a little bit silly to then be covering some there? And so that's where it's like, one of the videos I have coming up is called like, expected value is dynamic. So the way each of these charts, as this pattern unfolds, every single bar, I need to try and re-estimate that and think, what do I think is possible? And like, so it's one of those things where you just need to constantly keep on handicapping it. And like, yeah, maybe covering at like 493, you're like, look, this isn't, if I'm giving this to 550, like if I'm giving this a really big stop, I probably don't necessarily want to cover in the 490s. That's a little bit too tight. If I was shorting some at 512 and only giving it a couple points, maybe I'm okay scalping some of that out. So it's like, I don't think there's really one answer to this, because it really depends how you structure all these trades. But overall, it's like, you just really got to try and adapt bar over bar. If this went, big bar, really big bar, then this went like all the way to 460 or something in like 3 bars. If we just went 1, 2, 3, I'm probably getting out of everything because that just went, 50 points in 6 minutes. We're probably going to retrace. So it's tough because you need to be adapting based on how that's unfolding over time. Because like the thing is, when this gets to 470, I could definitely see that bouncing to 490 or even 500. So I need to be willing, if I'm not going to cover some, I need to be willing to accept that this could really bounce. So I get what you're saying, and it's one of those things where you're just really trying to constantly update your estimates as this unfolds.
Okay, that makes sense.
Yep. What are some common low-hanging fruit ideas to get more expected value out of a trade? One low-hanging fruit idea to get more expected value out of a trade is just more precise entries and exits. Especially on something like spready like this. On spready stuff, maybe there could be times when too often on spready stuff, you're hitting the bid rather than trying to get taken on the offer at a midpoint or something. There could be times in liquid stuff when you should be using a stop order and you're not, so you're getting slippage. If there's something super liquid and I can buy 501 and every time you're buying 503 or 504, that's very low hanging fruit that's leading to slippage. Other low hanging fruit, finding cheaper borrows, finding lower commissions, stuff like that matters. That's the stuff that immediately comes to my mind because it's so applicable to so many people. Is that like a little bit of a good start?
Yeah, that's cool, especially like the hitting the bid versus the midpoint or using stop orders.
Then you say reducing stop loss size in situations where a tighter stop loss may not lower the probability of the trade. Yeah, that's a great example. You know, there's times where people, and again, this comes from data and experience. Like there's times where like, you know, for me in here, if this went back above even like, even call it this kind of pop, like I really would not have liked it to see above 535. But it's hard. Maybe you still want it. I don't know. If this got above 540, it's probably going to 550, honestly. So stuff like that, I think over time. But it's hard because you got to make sure you're doing that intentionally and you're not just giving up, you know, win rate and everything.
Yeah.
So you want to know a really obvious thing? And I would get on my trainees all the time over this. Like you always need to, oh my God, this is going to be a hysterical story. I've got the example for you. 348. Oh, this is it. Okay. So one thing that I always taught trainees is you always want to have bids and offers in. So like, let's say MSTR is slowly starting to waterfall and selling off. Like all throughout that, I always had bids in MSTR like 20 points lower, right? Or like, you know, I would just have stuff pyramided way, way, way lower. Like what happens if it just goes and really swishes, right? Like some of that stuff can move so quick that if you don't have orders in, you're not getting it, right? So I always want to have proactive orders in. And so one thing that happened, I think it was this day. No, this is, oh wow, this then had the yeah, so Thinkorswim added more hours for some of these stocks. That's not the day though. Oh, is this it? I'm close. Oh no, it's not it yet. I'm close. Patience, my friends. Was it here? It might have been this day. I don't see it. No, because why does this start at? I think it might be this day, even though I don't know why Thinkorswim is starting this at 6 a.m. There were definitely going to be prints before 6 on this day. Okay, I'll just skip finding it and just tell you the details. So like, I was shorting some of this Tesla on the front side, and so maybe it was the next day. Hold on, this is going to bother me now. No, because this was the day it cracked, so it wasn't this day. It must have been either this day or the day before, but I was short some, like overnight we had popped a ton. So I was then short some, you know, I was short a good chunk overnight. Let me check the chart real quick. Day prior crack in pre-market. Let's see. No, it wasn't this. I do think it's on this day and it just doesn't have the data for some reason, but and it doesn't matter. I'm just gonna get to the gist of it rather than bore everyone. So I was short a chunk of Tesla on the front side, and like, you know, then obviously I go to bed, and it was one of those things where it's like, okay, by just in case by some fluke this shoots down a ton, I want to be out of that stock, and so. Again, I can't guarantee you it was this day, so don't quote me on this and be like, oh my God, Lance made up prints. So I'm just, let's say I shorted like 345 overnight or something. I put some bids in at like 331 and like 333 or something. And so then the next, then the next day I woke up and Tesla was still at 344 or whatever. And then I looked at my position and I'm like, what the fuck? Like, why don't I have a position? Like, was that all a dream? And then like, I'm just looking and I'm like, what the hell? Like, did I just dream that I shorted Tesla yesterday? I can't believe that happened. And then I'm like, God, like, there's no way I was dreaming that. like how did this happen? And so then I go and look at my transactions, and then I see at like 4 a.m. Eastern, like that I got filled on everything. And I'm like, what the hell? I made 20, or I don't know if it was 20, but I'm like, what? I made like 15, 20 points on this. Then I looked at my realized P&L and I was like, holy shit. And what happened was at 4 a.m., like I don't know why. I was obviously asleep at 3 a.m. Chicago time. But at 4 a.m., there was some bar with just a massive wick. Like, I don't know if like it just some of the exchanges opened weird and there was just a lot of cross liquidity, but there was some big wick that was like, it was like a 10, 15 point wick and all my bids got filled. And I was just like, what the hell? And the stock was still just right at like 344 or whatever. So I could have 100% reshorted the position, but I made like a magic like 10, 15 points just because I had bids in just in case. And like sometimes that stuff can definitely happen, especially in stocks like MSTR that are panicking. You want to know another point where this day, this was a spot where, especially as we were rolling over into the close, like as this is oops, that's a little bit too much. But as this was, potentially panicking into the close, I had bids at like 340, 350. Cause then look, if we're just cracking up here and if we super quick panic like the 50 points after a day like this, oh my God, I would have loved this thing at like 340, 350. Look where we closed yesterday, 420. So just in case, it doesn't cost anything for me to put a bid in. I mean, yes, it does tie up buying power, but that was the only thing I was trading that day. So yeah, that's kind of a point I want to make. Does that all make sense? Because that's kind of important.
Yeah, for sure. The just in case orders.
Yeah, that's a great, thank you for, saving everyone 15 minutes if I just, said that 20 minutes ago. But exactly. Blah, blah, blah. I get into futures. I started trading stocks. It doesn't seem far-fetched to nail 5 to 1, 10 to 1. I'd be careful of this thinking because in your note, you simply ask about risk reward. Keep in mind, of course, that always needs to be just coupled with win rate. But yes, I do think stocks do have incredibly skewed opportunities. I do think that's part of why I really push people into doing stocks over some of the futures Forex. Oh, and to Darius, who said, especially in options, because they tend to be more spready and less liquid, you can see some wild wicks in options, especially when you get stuff gapping up like that MSTR on its top day, like any big gap, like if you have a really good feel for what some of these options should be worth, you can get some wild wicks where just, someone does a market on open, and just because it's like most of these options will be so spready off the open, and you'll sometimes get some wild wicks happen and stuff. So yeah, the good old, I like that just in case orders. And like, so in general, Sean, I'd say like, yes, I do think it is my personal bias that equities do present some really great opportunities. Like find me the MSTR of futures, like nothing is doing stuff like that. Yeah. And I know there were a lot of questions on MSTR, so we'll get back to that one. So Tara asked, can you talk about the falling from DRC 37? I didn't know which specific one from that batch, but one, listen to position, listen to chart. Like I never, ever want to fight a chart. Like someone else brought that up as a question. The chart is always the truth. No matter how dumb I think a move is or how irrational, the chart is always what I listen to. You can get super cut up fighting the chart and stuff like DXYZ, MSTR. The chart is the truth. I am a trader of the chart, nothing else. With lockouts, I don't know the exact reference for this, so I'm skipping that. So no fighting for any size. That just means I just don't want to fight the trend. Sometimes what would happen for me is I might fight the trend for a smaller size, but it's like, Lance, that just doesn't work. It leads to headache. So that's a reminder for that. Offsetting P&L went up a ton. What I mean for that in some of those daily report cards is there's times where I might be up, say 50 grand, 100 grand. What I would do sometimes is like, if I'm up 100 grand, that might desensitize me. And then I just get sloppy and kind of give it back. So sometimes I would just offset my P&L and be like, okay, I'm really up, I'm really flat on the day. So then it's just like starting from scratch. just resetting. So I'm not playing like with house money, that mindset. Neil. So this was a good question. I remember reading over these. I do read over and prep every single question you all ask, which is time consuming. So Neil had asked, I mentioned on the Sunday session note on liquidity on stocks that are very highly liquid, like PCG, UXIN, that a lot of these moves are worth hitting due to the insane liquidity. Can you explain the reasoning behind this? Yes. So when something is very, very, very liquid, there are times that you can risk very, very small amounts with some incredible skew. So I'm trying to think of a good example, but especially if you get very volatile stocks that are liquid, there will be times, and keep in mind this question is referencing tickers from 5 years prior, which I'll pull it up. Hold on, I'll pull it up. It might just take me a second. This was PCG on 4/12/19. June, February, March, April 4/12/19. Let's see, what do we got? PCG. Okay. Yeah. So there's times where like this PCG was doing tremendous volume at the time, I remember. And then even UXIN, this was a lower price stock, if I recall. Ooh, this must have done a bunch of reverse splits. This was not like this. 416. Okay, I remember this. So keep in mind, this was not $270. This was probably like $5 at the time, but it's all those reverse splits. But this is something where when like look at this here. If you can risk, if this is super, super liquid, you can risk potentially 1 penny, right? Like I don't know what this used to be. Let's just divide it by 100. And let's say this was $2.70. There's going to be times where you can short 269 and cover 270 if it upticks. So you're risking 1 penny, but look how far this thing ended up melting. This thing just on prior bar highs, this ended up going, by that logic, 70 cents if I'm dividing by 100. So there's times where stuff is super, 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 super liquid, where you might be able to even just risk 1 penny. Like this happened in Ford a couple years ago at this 10-20 level, where it's like, if I can hit the bid, and especially if there's large offers, there's times where you can like think about this. Let's say you get some amazing setup where it goes from $9 to $10. We consolidate perfectly. Then we break out above $10. There's times where you can buy $10.01. And by symmetry, that breakout will end up going like a whole other dollar. But because the spread is so tight and it's so liquid, you can just get insane risk reward. Now, keep in mind, like if the spread was 7 cents, let's say I had to buy 10.05 and I would have had to hit out at 9.95. That essentially multiplies my risk by 10. So no way can I get that same level of skew. That doesn't mean it's a bad trade, but when things are super, super, super hyper liquid, it just sets up some incredible risk rewards. So that's my logic behind that. So then Ben brought up the point that I was just talking about, listen to the chart. What led you to develop this concept and how did you use it to your advantage in real time? So what led me to develop this concept is that I would look over all the best trades that I would have, and I would look over all my worst trades. All of my bad trades never happened in good setups. All of my bad trades happened from me fighting the chart. Like it's me being long on the left side of the V. It's me being long before something panics and capitulates. It's me thinking, oh my God, this news isn't a big deal. And I'm fighting the chart rather than listening to the chart. And so when I looked through all of my really, really bad trades and all of my big losses were almost never a bad trade all of my big losses were almost never a good chart that just didn't work out. Almost always, it was just Lance, what are you doing, you bonehead? And And so that's why it's like, when you start to use your logic, let me turn this off. You can say like, oh my God, like, why is Tesla up so much this day? Why is Tesla up so much this day or that day or that day? And the more you use your logic rather than just listen to the chart, it's different. All I can do is just wait until the backside and the right side of the V. You want to know where I can get hurt is this day, this 1120. And that's why I even tweeted this out. You got to be careful on this day. Was this the day? 1120. You know, what's happening? Like, and I think Ozzy had asked me about this online. Like, this didn't really have some big capitulatory flush out. Like, there wasn't some big exchange in volume. We didn't get overextended. So you can really kind of wreck yourself hitting down. Then we squeeze higher. We make a higher high. You can chase and short lower. We then squeeze higher. And so a lot of what this happens is because we don't capitulate, people are just like thinking, oh my God, today's got to be the day. Today's got to be the day. Even though like it's saying today's not the day. We're holding higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So a lot of that gets people into trouble rather than just saying, okay, for me to get in all of this, to me, I don't want to be short. The only way I'm going to get short is if we break, you know, like 460 or even whatever this low was, 456-ish or something. And so I just found like I do best when I listen to the chart and I just ruin myself when I don't. So it came from experience. Timothy Lung. How do you evaluate how much? Oh, so this was also an important question. And I'm going to answer this important question with mostly non-answers. How do you evaluate how much news has been priced in? For example, with Fed reducing interest rates or Trump winning the election. So, you know, how is this related to how much of the public believes in the event? My short answer is I don't do any of that. I don't care what is or isn't priced in. I'm not an analyst. I'm not trying to debate that. And that's why my sole job is to listen to the chart. You know, somebody asked me some question on Twitter. Oh, what do you think of blah, 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 blah. And I'm just like, look, dude, all I do is trade. I just trade the charts. You know, like I try not to have a view on how, oh, the Fed cut interest rates or the Fed did this. I have no clue. That's not my job. There are people infinitely smarter than me trying to figure that out. That's not what my edge is. So I don't do that. I do not evaluate that. How would you evaluate how long would the effect of the news last and eventually fade out? For example, news of M&A and all that stuff, earnings results. I don't. My short answer is I do not. Roberto, hit me.
Have a question related to that. How do you know or not know, you know, like how do you prepare for the next thing? Because in an interview months ago, someone asked you a question like, well, what do you expect from this year, the next quarter, something like that, and you went like, oh, you know, crypto could be in play, the semis are about to break out, and that was exactly what happened. The next event. So how do you prepare for those things? How do you identify them and prepare?
You know, a lot of it isn't like, you got to put a little thought into it. Like, obviously, Trump is president now, right? Like, you should be preparing for what tariff headlines could we see? Am I following him on Twitter? What things might happen? What stocks might be affected? Like, I don't think I'm any good forecaster. I'd say for all of this stuff, it's just not really my job. Like, you definitely want to game plan and prepare a little bit. Like, you should know that, hey, this election could be a big event. I want to know what I should be watching. Okay, you know, crypto, Tesla, whatever. Although that being said, I didn't know any of this stuff. Like, I didn't know Tesla was going to move that much. And the other thing, which is a question later on, the options market didn't think so either. So like, I don't spend a ton of time thinking too much about this. I might very lightly think, okay, you know, the next thing on my head right now, it's crypto MSTR and it's Trump tariffs. And like, look, like the best stuff, the best stuff is the true black swans, like the COVID, the stuff that nobody a black swan by definition, nobody's thinking about. They're not aware of. If I said it as a black swan, it's not a black swan because that voids the definition. So it's the stuff we just can't even think about. That's the most. So I don't waste too much thought, but the stuff that you should be thinking about, and there's probably more than that, just this, but Trump tariffs. You know, and like even like one thing that's interesting too is like all those Chinese equities have been, you know, after that stimulus up move, all these things have been utterly bagged right now. Like all this came way back. Like, I mean, I think Baba's even worse.
NVIDIA as well.
Yeah, like I mean, so like these Chinese stocks are going to be very sensitive to what happens with those tariffs. So I don't predict too much. That's your time's better spent on just learning setups and the charts. So yeah, it's not my job to know how long will news affect this or that. I just trade the chart. So for the short of MSTR, which I'll probably get to it in more detail at some point, how do you determine the price of MSTR has been reverted from divergence? So MSTR is at a massive premium to where it should be. I think it's what, like a 3x NAV or something. I don't really know. It doesn't matter. Well, now it's going to be less because of the collapse. But regardless, the actual NAV is probably, don't quote me on this, I have no idea. You can actually figure out, but it's probably like, I don't know, 150 to 200-ish. So, but I don't expect this to close in a day or potentially ever. Or anytime soon. I mean, I don't really know. So it's like, even with this question, it's not really my job to know how that divergence is going to close so much as I'm just trading whatever the chart tells me. And thank you for the applause on the P&L post that I did. Somehow that got a ton of traction. I'm going to get back to MSTR at the end, by the way. I know I'm skipping over this just because I'm going to actually dive into it more. Good old Miggy. Do you think your capitulation style edge works because when people become the most emotional, when people are the most emotional, that's when they become the most predictable, consistent? Similarly, is that how you also look at stocks in play, or do the other emotions of other participants not really matter to you? Well, I mean, I think by definition, most capitulations occur due to emotions, and most emotions, it's not just emotions, it's also market structure. Like during big panics, a lot of people get liquidated. Even if they're totally cool, calm, and collected, you can get liquidated just because you were offsides and levered. So I do think on stuff like this, yes, it's emotional. Yes, it's euphoria, but it's also a lot of shorts that are just like, oh my God, if this goes to 1,000, I'm going to be blown up. So it's market structure and emotions, but I do think that's what makes capitulation so powerful is like, as long as you don't get involved early, like when other people are getting blown out and blown up, you're able to take advantage of that. You're there at the tail. When you're not there, I don't want to be short MSTR anywhere in here. I don't even want to be short MSTR here. I want to be short once everyone that was already short is blowing up. More so up here, right? But it is kind of that caution and not being involved in no man's land that allows me to be flat and able to get involved on the tails. Like all capitulations to the upside or downside, that's just tail risk unwinding and everyone, emotion, psychology, market structure, all of that. How do I identify bearish and bullish capitulation? I mean, there's many ways to identify capitulation, expanding price and expanding volume, acceleration, look, I mean, here we're barely moving and look how quickly we did 200 points. We did 200 points in 4 days. So just an expansion and like capitulation is an acceleration of price, and volume and everything else. Roberto, hit me quick.
Real quick, the difference between the long bias mean reversion with the stock, waterfalls, then revert versus the short, the backside of a parabolic move to the upside, because it seems like there are some nuances
Yeah.
that make the difference in those two scenarios.
Yeah. Okay. Yeah. So this is a super important point. So I actually we'll address this. A downside capitulation is 1,000,000%. That's not scientific. That's just exaggeration. But a downside capitulation is so much safer than an upside capitulation, right? So my ability to go nuts on MSTR, I am so much more scared of MSTR than I am scared of NKD, right? NKD is an index, it's the Japanese stock market, and the most this can go is to 0. Not only can this only go to 0, but let's be realistic. You know, the NKD was not going down 90% or 80% or 70%. And even if it did, it was not going to stay there. Something like MSTR or anything to the upside, crazy and insane can always get crazier. So like someone on Twitter who I ended up, yeah, and there were the bank stocks here. Grant, thank you for that. And Monish brought up a good point in a direct message here. With that logic, should you be playing the inverse ETFs or on an upside capitulation to be able to play against the lower bound? Like, I do think there's some validity to that. Potentially, but inevitably, you can still get owned doing that, but at least it's somewhat capped. The most you can lose is 100%. So I do think there's some validity to playing in inverse. Sorry, there's just a lot of text now. Let me read these. Yeah, so Guri, I'll get to that in a little bit. But to this point, you need to be so careful shorting, someone was talking, and the one thing that I flipped out about last week was someone tweeted how selling $700 or $800 calls was risk-free, free money. No. In something this volatile, there is never free money selling a naked call option. So many people can blow up selling anything naked call option, unlimited risk. And the margin on that, even if this went to 650 or 600, the margin on that must be absolutely insane. And margins, especially when they're going against you, those margin rates will get really jacked up in something like this. So moral of the story, though, is a downside capitulation, thanks to the lower bound of 0, is infinitely safer. You can only lose a max of 100%, but especially, most stocks aren't going to 0. That being said, there are definitely times when a stock can go up 100%. I mean, look at this. In theory, this went up from 260 to 520. So yes, I do think playing an inverse ETF where you at least have the lower bound. Again, I'm not really overnighting some of this stuff short too much because I'm pretty scared of that. But of course, doing that inverse does at least save you from them losing hundreds of percent and stuff like that. So now let me hop to some of these real quick. Actually, what was the original question? So part of and I'll get to some, if we could just time out real quick on the chat, just because I'm way behind. So the other part of this question was, do you play pattern failures at all? I mean, I guess I would ask how that is defined by you. I mean, I would consider MSTR, that's, MSTR's uptrend essentially failed when we at least on an intraday basis, when we broke that 512, I think it was. That 512. The other thing too that's nice is 512 was really close to the prior day range. So this is called, I always flip these. This is called, I believe, an oops up day, or maybe it's an oops down day. There's some technical term for this. I always confuse them. But that also coincides where we break into the prior day's range. So I would consider this a failure pattern, if that's what you meant. How do you know when it's time to break the rules? The answer to that, at least my number one answer is break any rule. I mean, there's one rule you never break, the one rule you never, ever, ever break is you don't want to risk your livelihood. This is not poker. You know, if you're playing with your livelihood, you do not ever go all in. Weird, crazy things happen. So the one unbreakable rule is, you know, always live to see another day. Rules you do want to break, I would say pretty much any rule where the expected value dictates otherwise. So it's like, you know, if I'm telling you to not play No Man's Land, but there's a really good setup there and the expected value and the data is good, you trust the data and the expected value. The expected value always dictates everything. So I will definitely, you know, I will buy ahead of a breakout. I will not listen to prior bar highs. I will do all sorts of things that break my rules if I believe it's in the name of like optimizing expected value. Now let me get back to some of these real quick. What gives you the conviction on Tesla short overnight at 345-ish versus the MSTR where you waited for the turn? I mean, I wouldn't exactly say that. So I'll definitely play stuff. It's not that I was so convicted on the Tesla. I mean, the Tesla's an infinitely safer short than MSTR. Like this, if Bitcoin broke 100K overnight or something and just rocketed to 110, you easily could have seen MSTR at 600 plus. Tesla is not really going to gap quite as insane. And I wouldn't say that I was so convicted in Tesla, but there are times where it's like, especially if we're gapping a lot in the overnight session, I'll at least want just some exposure. So I really wasn't so convicted. I just wanted some exposure. Then I just happened to get lucky with that crazy wick. Yeah. So Darius, do you like 5 ATRs in 5 days to start to put you on notice for a reversal? I mean, I would say the context matters. It's not, I don't want 5 ATRs so much as I want an acceleration. Like if we just go 1, 2, 3, 4, 5, if we're just slope of 1, I have zero interest. So I would say no, that doesn't put me on notice. I want to see, you know, 1 ATR, you know, 2 ATR, you know, 4 ATR and 1 bar. I want to see an acceleration. Acceleration is way more important than steadiness. I will not fade steadiness at all. I have no interest in steadiness. Lewis, have you used tick 133 and ticks 333 charts? I don't even know. Without knowing what tick 133 and tick 333 charts are, some videos mention that whales and big institutions use those charts. I will just immediately call bullshit. And whoever is selling this and peddling this is probably just total scam or bullshit. I mean, most whales and big institutions, they're not even using these charts at all. It's just algoed at this point. So short answer, I leave room for, I'm speaking with having literally full ignorance on this. But my bullshit meter is very high on that. Suncat, in the previous video, you said we can take the backside short using the prior 2-minute bar. When do you use prior 2-minute bar and when do you use previous, you know, highs? Does it depend on individual risk tolerance or does one have to take note on what works well for them? And I would say yes, it just depends on the individual. And like, in theory, there's some theoretical right answer, but like, it's so hard to know. Like, so if we pull up this MSTR, like, do I know when this breaks 112? I know I want to at least give it to, so this is an example talking about the spread versus when it's just a penny spread. This stock is spready enough that it's like, I don't want to use 112 as the level. I want to at least give it to the bar's high. And I'd even consider potentially doing here the day's high or 550. I don't know what the right stop is. A lot of times it's a judgment call. And it also depends your style and your risk tolerances. The tighter you are, the less you're going to be like stuck giving back tons of P&L. But I think it mostly just depends on the setup and for you. For me, everything I was short maybe I would lighten up here. Then I probably would have given to like, I don't know, maybe like 543-ish or something, maybe 550. I don't know. It really, a lot of my decision as far as stop for this one, if we got a lot of this would have been on like how ferocious, like for example, this bar right here was interesting. Like, these bars were super wiki. Actually, someone brought this up on Twitter and I told them to, keep on thinking. These bars were super wiki. So when we rolled over, this, like a lot of people will hit this low, even though this isn't that good of a setup yet. Like these bars are super wiki all over the place. So what happens is a lot of people hit this low, it doesn't go anywhere, then they all get squeezed out. So I really, really felt like this stock was relatively weak off the open. Like we could not go anywhere. We start to fail, but I feel like this bar right here, all this is all the people that hit these lows, they're then just squeezing themselves and covering. These are all the people that chase weak hands, then boom, cover and get squeezed. So then when we couldn't, then we start to roll over. I'm like, okay, this is more the setup. Time out real quick. I'm just gonna get water. My voice is starting to hurt already. Hold on. Okay, game on. Yeah, these things always kill me. The nice part is we're making really good progress on thank you for that side message. We're making good progress on a lot of these questions, which I'm happy. Darius, with opportunities like MSTR on 1121 and SMCI, what advice would you give your younger self who is still struggling to become a consistently profitable trader? How to approach and trade opportunities that you knew had that potential, but you may have not had the trading chops. Oh, nice. We're talking sandwiches now. I love it. Best sandwich shop in NYC. He likes El Antico Veneo, which is traditional Italian panini shop. So Hoboken has some amazing Italian deli. For New York City, I really love Faicho's on the Lower West Side or like Greenwich Village area, like FAICCO''S. I'm sure everyone is also curious about Italian sandwiches, but oh my God, the Italian delis in New York are so unbelievable. But alas, this was a good question. Like some of those home run opportunities, like which MSTR and SMCI, to his point, like may not have had the trading chops yet to execute. Like these are really hard trades. These are not for the new trader. That doesn't mean don't watch and don't get involved. But yeah, I would agree with the assessment of it takes some trading chops to execute on this. Like this is fast moving, big spread, very dangerous stuff to get involved in. And so I think for a lot of this stuff, like just recognizing that it takes a lot of time to develop this skill set. Like this is like Super Bowl level trading. This is not the slow moving stuff. It's not the tight spread. It takes a lot of experience. And so first of all, just give yourself that understanding and that grace of like, it's not your job if you're a newer or intermediate trader to like, just home run crush this stuff. It's solely your job to improve and get better. And like, that's why I made that post on some of the P&L stuff. It's like, okay, like if you have your best day ever, like great. What can we learn from it? Or what did you improve? Like, it's so much more important to share what you learned or how you improved. A lot of the P&L stuff, I think just comes down to ego. And I think it also leads to this toxic feeling of like, so many traders I work with, no matter what happens, they always feel as if they underperformed. And like, so there's these two traders I mentor at SMB, and like they've grown so amazingly, like so much. They're doing amazing this year. But they all, like every big trade that happens, they'll do what I consider very well for them. And then they'll just be like, ah, shit, we underperformed again. And I'm like, dude, like, so I asked them, what trades did you outperform on? If you're underperforming on these, by definition, you know, there's some standard where you must also be outperforming on others. So where's the outperformance? And my point is if you can't come up with anything that you outperformed on, like you're holding yourself to some ridiculous, like, you know, above standard level that you really shouldn't be. And it's just not healthy, right? Like nobody wants to go their whole career just always feeling like shit and like they underperform. Like it's just not fun. And like, you're going to eventually look back and just be like, oh my God, all of that was just such a massive waste of negative emotion. Like I got in so many different holes and so many losses, and there's so many trades you feel like shit on, and like it would ruin your week, your day, your weekend, you know, whatever. And at the end of the day, it's like the point is to grow. And if you grow, all of that is a rounding error. And like, why suffer through all the negative emotions if you don't need to? Which is kind of, I'm getting off topic, but to this question, it's like, you know, what I would recommend is to document these plays, to study them, and get involved if, you know, as safely as possible. That could mean trading demo. That could mean trading 1 share. That could mean trading 0.1 share, or just simply watching. But what I would also say is you don't want to shy away from this stuff. This stuff, MSTR and SMCI, these were some of the best plays of the whole year. Like the quicker you get involved safely, again, that might mean demo. I'm not saying blow up your account. Safely get involved, the more you're going to learn. And like when I first started at Trillium, my mentor, like, and again, we had safeguards. There was a max loss. We were trading very small size, but it was one of those things where it's like you wanted to, the best time to get involved in a spready stock is yesterday. The next best time today, you know, the best time to get involved in something after hours, the best time to get involved in breaking news, the best time to get involved in a crazy MSTR exhaustion gap, all of that stuff, like just start building the reps in a safe manner. So I would not push off getting involved in this. Like it's just, there's nothing that's going to help you learn faster than just getting involved and making it real. And you just said I traded this with 1 share. And dude, so that's an amazing win. I think what you're doing then is spot on. But the most important part is to trade it and get involved, but then to just write it up and do the learning in very high detail. But don't shy away from this stuff. And like, so here's an example, and I'm using golf again. Not that I've even played in a couple months, but like, because I suck at golf, I would always, you know, a much safer play than using my iron to chip the ball is often to just use my putter. I have it's much lower variance because of my skill level, even where most pros would just obviously just chip it. And so my golf lesson dude, my instructor, he's like, Lance, like, if you're on the course, that's one thing, but we're here to practice and improve. You need to be using the club that's optimal to learn for the long run. And it's so true. And it's just like that. Like, even if you're not ready for this stuff, just watch, just trade it on demo, do what Darius did, do 1 share if that's within your things, your risk limits. But you want to get involved in the best stuff. And if you're not getting involved in the best stuff, you're really going to just slow down your growth. So I hope that helps. Tara, who's also on the call, wonderful, thank you. When EV is low, I omit a trade, then it goes on to be a 3 to 4 RRR, and I miss a good opportunity. Can you explain circumstances? So with this, it's like, first of all, like, again, I want to get all of you away from too many questions are always phrased just in time in terms of risk reward. It's not, you can't ever address something in just risk reward because it's all commingled with probability of success. If you tell me, hey, Lance, I found a 4-to-1 reward to risk trade, isn't that great? I don't know. Like, no, there's no answer to that question. It's not like, just because the reward is 4 times the risk doesn't mean it's a good trade. No one can answer that without knowing the probability. So just because something goes 3 to 4R, that's omitting the most key point, not the most key, but the necessary point of what is the associated probability involved. So otherwise, it's really hard to say. And there's no way to know whether any given trade is going to work, but eventually we just have data over time. And so now you're saying 65%. So if it's 65%, then that, if we have 3 to 4x the reward over the risk and it's 65% win rate, then that's probably a good trade. Then on average, you do want to be taking that. And, you know, over time, though, we just refine with that data and learn. But anything with meaningful, you know, if we have 0.000001 expected value, we probably don't want to bother. But anything with statistics like what you just described, you know, 3x reward and 65% win rate, yeah, that's a great trade that we want to start documenting and playbooking. Then the other question from Tara was, what kind of market are we in right now? Is this irrational exuberance? I mean, first I would say it's not necessarily, I try not to make judgment calls like so much, but I wouldn't say this feels so frothy to me. No, I don't, there's some stuff that I think is a little frothy. I mean, like Palantir is a pretty damn crazy one on a valuation perspective, but no, I don't think so. I think a lot of this is just, you know, Trump expectations for businesses and everything else. There's definitely been frothier markets for sure. I don't think a lot of this is irrational or exuberant. I mean, stuff like MSTR, like, okay, MSTR is pretty damn dumb in the grand scheme of things. But overall, I don't think the market is so crazy. Ozzy asked about MSTR. I'm still going to hold off a bit on that just because that's going to be at the end. So Grant, who is also on this call, hold on a sec. All right. Feeling more confident. Congrats. That's awesome. What super high win rate trades and setups can you recommend on more of a day-to-day basis when waiting on the big opportunity days? You know, it's hard to say because it really depends on your style. And I don't think, also the other thing too is like, the reality is there's not just going to be a ton of super high opportunity plays just sitting around. And I think a lot of them are kind of cyclical based on the market. I mean, you'll get a lot of weird different things like in really, really bullish markets, you know, people on CNBC will start moving stuff. Like when AI and crypto is super hot, if you get an AI or crypto headline, that stuff can really start to move. So I'd say some of the stuff, like, especially if you're in a hot theme driven market, like some of the AI or crypto, like if some of the low floats start to move on like crypto headlines, like that stuff tends to be a little bit easier. But it's a lot of the stuff changes over time, and it's not as if it's like, oh my God, all this free money sitting around every day. Because a lot just varies based on the day. Some days are just slow. And this is also a warning, guys. Like we're heading into holiday season. Like minus MSTR next week, I definitely could see things being slow. And the year's been so busy at this point where it's like, you need to be prepared if especially Christmas, New Year's does slow down. You remember me mentioning that some guys at Trillium were green 80-90% of days, blah, blah, multiple traders. Yep. Yeah, I mean, a lot of this stuff, it's like finding ways where like either even just small setups like you know, like this MSTR that I pointed out, what day was that? Oh my God, was that back at 200 already? Like this MSTR $200 break is like a really nice little single to hit. Even that Nvidia, that $145 setup that we discussed earlier, finding, you want to know that wasn't bad either. That Tesla flag, you know, was okay. Not that this was like so perfect of a flag because this kind of breached it, but I definitely, the way this Tesla was narrowing like that, I really could have seen it kind of doing what it did. So I think looking for some of those setups and refining those are kind of a way to do it. AG, finding a groove. Oh, so the other thing too, that's just reminded me is like some people just really do a lot of reading the tape, scalping type stuff, using the level 2 box and everything else. So there's a lot of ways, and I can't really speak for you or anyone or everyone, but it takes time and work. It's not just so easy. AG asks, I'm running a stock on or scan on stocks with the highest volume, 2 minute bars. How can I calculate max share size versus current 2 minute bar volume? You know, okay, here members Mad As got clobbered one year because he was trading too much size versus the volume. I would say it's not just so much about the volume being done in the 2 minute bar, but also just what the level 2 looks like and what the order book looks like. You can be doing a ton of volume. Like if something is breaking out and doing a ton of volume, like I care less about the volume it's doing and more about what's actually on the bid or the offer. How much liquidity is actually there if I need it. There isn't just some straightforward calculation that you can do. A lot of that is going to be feel and testing the waters gradually over time and seeing when you start to lose expected value. By nature of liquidity, as you push size, it's always going to start to impair your EV overall. So there is a fine line where it's like, oh my God, this just isn't worth it. And I know how Mad As overdid it, and I've overdone it. You do got to be careful with that. But a lot of that is just feel and experience. And if you're worried about your size, you're at a level where it's like, hey man, that's just going to be from feel, and safely kind of pushing where the things are, where the borders are. My toxic trade, since I'm in a groove scalping, reading bid and ask on the level 2 of in-place stocks, I start to think I can do it on the ES futures. I mean, I think anytime you start to drift, you end up getting punished. It's like the old saying, F around and find out. A lot of times that overconfidence can just punish you. Like I personally don't find that there's much edge in the box at all, on stuff like ES. So I would not be doing that. For me, it's just, that's the benefit of stocks in play. The boxes there and the level 2 and everything have much more tradable, appeal. So I definitely don't even want to attempt that on the ES. It's just all algos. Thomas, what is your approach for daily mean reversion if the price action is capitulatory, but the next day it opens inside prior day's range or even gaps down? Now with prior day's high so far away, is it still in consideration? Yeah, so I think with a lot of this stuff, over time, you develop a playbook for how you want to attack different setups. So at least for me, and I'm just going to speak in broad, general, vague terms, we cracked into the close here. 1 second. We cracked into the close here. So I definitely felt that there was a world where like the top was potentially in this day. So then you really need a game plan. Like if we open the next day at like 460, if we open around here, I'm probably just going to wait for the break of prior bar lows. Unless there's a really good intraday setup, and this is where it gets hard because the intraday matters a ton. So if we open at like 462, I'm going to wait for this break of lows. If we open at 485, I might try and short a pop. If we can flush higher, I might want to potentially short into 500 against those prior day highs. So with experience, you start to build these different permutations, and that's part of game planning. And I think part of pro traders, like what makes them so good, and Tom Dante's also done tweets about this. I think the pros really do a good job of game planning the different permutations. And so people at SMB, what they're doing, pre-market, even after hours, they're figuring out what do I want to see the next day? What are the different ways I'm going to attack this? If we don't gap, Yeah, like this was the best option. You know, we had a massive gap. The big gaps always make it the best. But they're saying, hey, you know, this is my A plus. What if we open at 460, 480, 490? What about these different intradays? What if we flush higher? What if we fail? And I think what it comes down to is you just want to game plan and rate and grade these setups and know how much you want to risk and where you want to risk it and what you want to see. The other thing that helps is just building the databases of all these things. When you have like 50 charts of each of these patterns, it really, really helps you see the different ways these can unfold. Take a look at GLUE. GLUE, I assume on this day, 1020. No, it was on 1020. Oh yeah, it was on this day, 1028. 28. Let me see this thing. Ten 28. At 11:30. Got stopped out with weird volatility on prior bar lows. 20 minutes later, it broke again. So yeah, I mean, some of this stuff is tough. Like, I actually think this is a totally fine setup. I don't mind buying that at all. But I think this is where, like, this is where if I bought this, I think this was roughly 850. If I bought this, you know, I might just, I don't know if I want to give it that full risk all the way down there. Maybe I'll just give it to just like 850-ish. Then we fail pretty hard. The one thing though is then this reclaims and consolidates. So I assume what happened is a lot of people, and you can even almost just tell by the volume, like a lot of people bought this bar. And I don't think there's anything wrong with this setup. Like, I think that's totally fine and that's a fine loss. But then to your point, you got, you know, then that kind of scarred you from playing this one. Honestly, like, I don't think that's the worst miss in the world. Like, after such a quick fail, that's not a ton of time consolidating for us to then, like, yes, it worked very, very well. But I mean, I don't necessarily think you did anything wrong. Like, I don't think this was a bad buy. The only thing to this credit though is these bars are super, super tight here. So unlike this one where this is a very rangy bar and like in theory you potentially want to give it down there, which I don't want to do. These bars are tight enough where, like, you know, maybe you rebuy like this break above here and you just give it to there. But I don't think you should beat yourself up too much over this. Like, I understand why you did it. And that seems like somewhat reasonable. So yeah, I don't know. There's sometimes it's just like, I don't know, sometimes stuff that's a decent setup just doesn't work. And like, you know, I can totally see why you did what you did. And I understand it. Like, I don't feel like, oh my God, like, dude, this was so good. You had to be in it. Because after that fail, that does make it tough. Like, is this just going to shake out again? So yeah, I don't think that was necessarily anything wrong. Again, and you said, what nuances do I see though that this was the one to be in? The biggest nuance is these two bars. These bars were just all so tight, like super, super tight consolidations. Again, I don't mind this though. I don't mind this setup at all. But if you said, hey, what is the biggest pro of this? It's how nicely this tightened up. Good old Stan, my salmon expert. Any recommendations on how to get myself to stay in trades longer? I scalp and I'm looking to stay in, let's say, Tesla for my first take profit at around $1 if the setup is showing, and then leave a runner. So like, the most important thing is like people, and I'm not saying this is you, but like, you know, some people will say, oh, I want to hold on to my winners longer. And it's like, what I would say is like, you really want to do whatever the expected value is saying to do, and like whatever your system says to do. And most people where it's like, oh, I'm often taking it off within, you know, too quick due to fear and greed, then I would say like part of that is simply first building a system so that you know exactly what your entries and exits should be. And if you're not following your entries and exits due to fear and greed, I would just be sizing down and building that. Like, you can't judge a win based on the profit or loss. Like, if you didn't follow your system and you let fear and greed dictate your exit, that's a loss. You lost. So I would just be reframing how you view all this stuff and trading a small enough size and building up a system that's based on data. Because you just don't want to let fear and greed be what dictates the exits. You really, and trading is too hard and too efficient to let fear and greed dictate. You know, you really need to follow the data to make sure you're capturing the full reward on your plays. And if that means, look, if that means you're trading one share to build that habit and work from scratch, it's better to have a system that you follow than not. Kashal, I've noticed that you talk about identifying a single buyer or seller through tape reading. Do you ever identify a buyer / seller purely through technical pattern recognition, like moving stock with? So yeah, I mean, you can definitely tell a seller from the chart sometimes. I'm not going to be able to find some based on my head, but a lot of times when you have super clear resistance or super clear support, a lot of the time that's just a large buyer or seller there. Not always, you know, I'd have to see it. But yeah, sometimes you can just see it. And especially on the ticks, if someone's just refreshing, sorry, my voice is starting to bother me, but if it's just refreshing, you can see even on the ticks where it's, you know, you see all the prints and it just can't get below or above there. Is it possible to identify if the buyer is market maker, institutional, or retail? No, it's not. And I also just don't think it's relevant anyways. I try to always, I don't know how that would necessarily affect my thinking anyways. So real quick, Afonso said, Lance, in the glue 1154 breakout, would you buy the break of highs, say 867, or buy at the highs of those tight consolidation bars? For me on this one, I'm probably going to wait until the highs here. The question was, would I just buy the break of here? No, I probably on this one am buying like 866, and I'm going to give it to like, you know, 850 or so for that specific one. Let me check chat. I don't think I'm missing. Good old apartment 4. I'll get to these questions in a second. We're almost done with the Patreon ones. Then, so Khan and apartment 4. One sec, I'll get to these at some point. Oh yeah, we're very close to being done. Oh no, we're not. Oh my God, holy shit, there's a lot of these. So can you talk about, you know, risk monitor and how you use it? So a lot of that was just like, I mean, a lot of this was just applying to me having, you know, Trillium specific, just like software and everything else. So I'm not going to spend a ton of time on this, but it was a lot of just me having better risk management and using tools at my disposal. And so then even background colors, it's like, you know, I was able to set where it's like, okay, if I'm down a certain amount on a position, you know, it's colored so I can immediately recognize it. So it's nothing that crazy or applicable. Lift, the offer was saying, how do you think about size of legs versus number of legs and mean reversion? So certainly I want and this is important variables, but like the more legs, the better. And the more the legs accelerate, the better, you know? So it's like, I want the first leg to be 5 points. I want the second leg to be 10. Then I want us to go 20. That's like really good. Generally 3 legs or more are great. So Tesla, let's see. Tesla 11-8. So one thing with Tesla had a pretty nice $300 breakout, by the way. Yeah, Tesla 300 was super interesting that one morning. And so yeah, that's actually what we're talking about. And so he talks about, I had trouble getting size because of how aggressive the move from there to high of day was. So let me go into this. Oh yeah, this wedge was super interesting. Overall, this 11-8, like what more could you really want? Like this 300 level was super clean. The prior day, after hours and everything. Then this wedge, oops. This wedge is super appealing here. And this question was trouble getting sized. Yeah, this is the type of thing where once it goes, I'm probably okay chasing because this is just so good of a setup. Look at the volume break on this. And that's just such a good consolidation. Like I have no problem buying anywhere 320 to even like 321. Like I will risk 3 points on that all day. Like that is just such a good setup. Some of this other Tesla, I'm going to potentially skip just for time because this stuff I'm going to cover in my top ops. So Rick was asking, my initial playbook's very basic. I need to work on improving my current playbook. Just for most people, just document. Like, especially if you're still developing playbooks, just any stock that's in play doing something awesome, just start to put stuff into categories, and just study these charts again and again and again. So that's how I'd really go about on improving this stuff. What's sample number of trades? Like just the more the better. More. Like especially with programs like Stock Fetcher where you can go backwards in time, like just find every and I did, this is how I got good and I learned this stuff, right? Like if I'm trying to learn capitulation, exhaustion gaps, like you can just go backwards in time and just program stuff and find every single exhaustion pattern and just get all the charts, just study all of them and build these massive 50, 100, 200 chart databases and look through them and just find out for yourself, like, hey, what are the variables that matter? Why did this happen? Why did this work? What made it better or worse? Like you can only build that stuff from just going through hundreds and thousands of charts. There's no substitute for that. I'll be working abroad for 2 months, bringing external monitors. When it comes to continuing to grow as a trader when abroad, nothing crazy. Just try and keep with the routine. Like, especially if trading's your priority, like you need to prioritize it. And that gets harder with time zones, travel, everything else. So I would just say keep your routine as close as possible. Emreet, how do you measure that you're getting better at tape reading and how to fasten, this process? I would just say, are you starting to notice things and are you able to kind of tell a story of what's happening? A lot of that's kind of qualitative, but do you ever recognize kind of repeat buyers on a certain venue? Can you tell the difference between, oh my God, like we just panicked and now there's a vacuum of things on, there's just nothing on the offer anymore. Or like, oh my God, we just panicked and look how quick we snapped back. Like a lot is kind of just being able to narrate a story in your head that has some level of predictability and just like, oh my God, we weren't able to bounce at all here. Sellers are coming low. The selling pressure is much heavier than the buying. There's much more hitting of the bid than paying of the offer. I don't know how to fasten the process other than like just watching, the highlight reel. If you haven't seen that video, the One Lance B YouTube highlight reel, again, this is going to be a magnum opus video soon enough. And I'm going to have more tape stuff. Anyways. Let me see how much. Okay, we're not that far away. So then I'll get to some of these chat questions in a bit. Roberto's asking about during market panics, mean reversion, what adjustments do you usually make to avoid getting hurt in a falling knife scenario? Right side of the V. Oh my God, like in some of these big panics, it can be so dangerous. Even look at what the Nikkei did that one day. I'm not going to pull it up, but that Nikkei, that was a ridiculous move. If you're not waiting for the turn, you can just get absolutely just steamrolled. And acceleration, if something is steady melting, there will be times where like the world changes and we want to really go back in time. 2014 on Black Friday after Thanksgiving, OPEC didn't support the price of oil. Oh my God. Some of the moves that these oil stocks made were so big, but they were so steady, they didn't bounce. Massacre. So rate of change and all the stuff I teach on capitulation, it's just even more important because there will be moves like you can't even imagine. But as long as you find the acceleration, the capitulation, the panic, and you wait for that turn, you're going to be in a good spot. Allocating capital during panics, using equity versus short, delta puts. It's hard to say whether like options or equities are going to be better. For the most part, I find it's almost always like versus selling puts in a panic. I find that it's almost always like equity because if something's really panicking, like, and I'm getting involved, the reward is usually so good. And most times I want the skew. As opposed to just making a set amount of premium. But sometimes I'll do both. Like sometimes vol just explodes so much where it's like, oh my God, like TIGR, I gave that example. Oh, that video's not out yet. Alvin's, I think almost done with that. But I talked about selling premium in TIGR because it was just so crazy expensive. So there's times where like, yeah, I guess it depends the situation. So I can't speak generally, but sometimes, a lot of times it's just way simpler to trade the equity. Versus just selling. Because oftentimes I want the skew. I want the positive asymmetry. BRH asking low float breakouts. He's talking about stuff that breakouts and spikes super fast, giving you no chance to get any size. Some spike right through, but are slower, giving you a chance to get some bigger size close to the level. Some breakout and pull back for a minute. So again, as I touch on some of my heuristics, the best trades immediately go in your favor and immediately work. So if you're very slow to get size, you're going to have so much selection bias. You're only going to be getting like the lesser setups. So like that's where speed on your keys, hotkeys, programs, algo stuff, all that stuff is going to help you. Faster internet, all that stuff really matters, especially depending on the scale of time frame you're trading. If you have super, one thing that's important, and I'm not a tech wizard at all. I used to be. I don't know this stuff so much anymore. But people also greatly underestimate their upload speed. Download speed is important for data that you're downloading, but when you're transmitting back, that's upload speed. And I find that a lot of people, most upload speed in most places kind of sucks, which is kind of criminal. But I think the fiber companies of the world are trying to work on that because as more people work from home on like Zoom and whatever else. So if you're ever on a Zoom call and like you're getting super shitty reception and like people can't hear, like a lot of time that's because it's not your download, it's your upload. And so in trading world, I think a lot of people are finding latency in their upload speed and they don't know it. So yeah, I mean, it's just that stuff's going to help you. And I mean, so then he's asking, how would you get, say, 50,000 shares? And I mean, a lot of times the liquidity is just not going to be there on some of the best setups. And like, that's just reality. So in stuff like that, VVOS, you're just not getting that kind of size. There's no way. It's always the other thing I would say too is you always got to pay attention to the order book. Like if you queue up and you're trying to buy something at $20.20, but there's no liquidity there, but there's then a 5,000 share offer at $20,000 at $20.40, you need to be queued up appropriately based on the order book. You need to find where that liquidity is. I already tackled that question. Oh, my good old buddy, Robert O'Shea. Trading with the trend. How do you go about joining a trend that's not after a capitulation move? Ultimately, I always want some type of setup. I responded to Robert's question with my really long Trader Lion video on trends. But like, if there's not a capitulation, I really need a setup. Like, I really need some type of consolidation. I need some type of breakout. The truth is if there's not a setup, I'm totally okay with stuff trending without me. Like, I think a lot of traders, especially at Trillium, like, we're always shocked where they're like, "Oh my God, are you involved in this?" And I'm just like, "No, there wasn't a setup for me." Like, there's so many moves I miss, and I'm totally okay missing. And like most trends, like, I think I'm an okay with the trend trader as far as breakouts and some of that stuff. I'm just also very okay not catching a lot of stuff. Like, if something doesn't set up for my very, very, very specific playbook and exactly what I'm looking for, I'm just totally okay passing it by. So my short answer is a lot of the time I just don't join the trend. That's okay. Paulius, how early in your career have you implemented exponential bet sizing? Was it a common practice back, when you hit that Tesla exhaustion gap in like 2013-ish? Thanks for sharing that, Darius, that Trader Lion link. As far as exponential bet sizing, I think it's something I was always working on, and just always perfecting over time. And fortunately, I knew as a concept, it made sense just from seeing my mentor and boss. But it's something that more and more over time, you just learn to develop. But I'd say yes, probably not the first 6 months. Like, I'd assume, if it's like your first week, couple months, 6 months, 6 months, you really just want to be on micro size or like no size. You don't need to worry about size. But beyond 4 or 6 months, maybe a year, you do want to start to think about sizing and varying it, especially by the 2-year mark. You probably should have decent variance in your bet sizing. At 2 years plus, you do want to really start to ramp where it's like the okay trades are very small. The really good trades are at least, bigger. It's a work over process, or it's a process over time. Paulius said he has very detailed checklists for setups. Sometimes it's difficult to process all the steps in real time. Maybe you could give some idea on how your checklists look. It sounds like you probably do overcomplicate things, based on that. Like, I would definitely document all this stuff, but then I would document it just for the learning. A lot of the times, like, when I'm actually executing, I know what I'm looking for. And the way to know what you're looking for from a checklist is just reps, and study. You don't have time to sit there with a pen and paper and just be like, check up, check 1 of 50, check 2 of 50, check 3 of 50, check 4 of 50. So a lot of that is reps and experience to know and just have it internalized. Most of trading happens too fast. Like, when you're trading MSTR, there's so much going on. You're looking at Bitcoin, you're looking at this. You need to know exactly what you want to see and have it internalized beforehand. Luigi, who is on this call, have I explored Kelly Criterion and have I used it for your trading? I'm familiar with it, have not used it for my trading. Just because I don't know, I don't think it's really often that much of a science, and the expected value on plays definitely differ. Get a bit overwhelmed with the breaking news as there are hundreds each day. Can you share some rough filters to exclude and include? So what I would say is, like, welcome to the news game. Like, the process of cutting down the noise on the news game, this is like a forever process. You're always refining and tweaking these, and like, that is a huge part of the skill set, is just going through and figuring out what makes sense. So it's really hard for me to, it just depends what software you're using, what news you're trying to trade. And that's just part of the hard work, I would say, of refining that. That's kind of, I think, on you to do. I have posted a filter back on the early Patreon days of some of my filters. So it's already out there. And it's just, yeah, you got to put the work in at the end of the day, because it's a long refinement process. If I had to start all over again with like 10K capital, what easy money trade setup would you choose and how? I kind of touched on this. Like, you know, the truth is like, oh wait, the other part of the question was, what would you say is the average time of reaction you have to these news? I mean, I think you got to be executing, you got to be reading and executing probably within definitely under 5 seconds, probably ideally in like 3 seconds. If I had to start all over again, with a small capital like 10K, what easy money trade setup would I choose? So, and again, we kind of touched on this earlier. It really depends the market. You know, like at the beginning of the year when all the semis were breaking out, like I'd be whatever is just moving the most and the most in play. And especially on a smaller capital base, I'd probably be doing a lot of just smaller scalping, smaller news headlines, little, and like I described, even some very just small intraday patterns where it's like, okay, I can get, you know, 2,000 shares and make 10 cents. Alexander, blah, blah, blah. Mag 7 stocks. So I'd like to hear your opinion on what we can look for at different hours of the day as far as chart patterns or other technical indicators. So, I mean, time of day doesn't even matter like a ton for me. Like, I mean, again, minus what I said before, you want to be a little bit more cautious midday. Like, I'm always just going to listen to the chart, and whether something's a Mag 7 stock, like, I don't really, I think too many people think too much about like, you know, large cap versus mid cap versus Mag 7 versus this or that. A lot of these concepts apply to anything. So I'd really try to master a pattern and then just see if you can find that pattern in anything that's in play. So, oh my God, we're almost near the end of this. Then I could take some of these other questions. Amazing. So Derek asked, you talked about spotting options mispricing. So Derek's talking about the Tesla. Okay. So, I mean, I wouldn't say that I spotted any crazy mispricing, like except with hindsight, right? So on this day, which was election day, November 5th, you can look at the options market and you can see what the expectation for the volatility is, right? Like you can take a straddle and just see, you know, okay, base it, you know, call it 250. How expensive are the calls? How expensive are the puts? The options were really, I mean, it's easy to say now that they weren't that expensive, but I didn't have any view at the time. Like all I knew, and I can't remember the prices, but like a $70 call was, I think, like $2 at the time. So you could have bought a weekly call for like $2 with a 270 strike. Sure enough, Trump wins and we start the day at 290. So it's like, I had no view whether volatility was expensive or cheap. So it's not as if this was like, this was only something in hindsight where it's like, if we're at 290 after Trump wins, it means one of two things. Either this stock is up too much and it should be sold off, or these options were just priced too cheap given where we eventually moved. So yeah, that isn't really so actionable or anything. It was just an observation I had. Like, oh my God. I mean, look how far Tesla ended up going from 250 to 350. Yet like think about how cheap those options were. Again, I only know that with the benefit of hindsight, but that's crazy. Like the market did not, like this was such a reflective thing where once Trump won, it was like, holy shit, everyone's buying Tesla. But the options market, just did not price that in. But there was no way for me to know that. I had no personal view on that. So do I ever use option flow for your analysis? Not a ton. I mean, I'll be aware. Like I do think the options market is moving stuff more and more. And I can nearly guarantee you a lot of this MSTR move was options, especially from some of those levered ETFs and retail. Final question from Stan, then I can hit some of this chat and open things up. It took you about 2 years to get consistently profitable. Everyone's different. What were the top 2 mistakes you still kept repeating in your last few months? I don't know if there ever is a tipping point that finally makes it click. Like, I think what happens is you find one flaw in your trading that you find one mistake that you make again and again, and you just relentlessly work on that one mistake. Like the whole daily report card teaches. What's the most important thing you're messing up? Then just relentlessly focus. Oh no, did I not record this? No, I did record this, right? Oh, thank God it's being recorded. I gave myself a heart attack. False alarm, guys. So I don't think there was like, I mean, I guess one thing that hurt me a ton was I would hesitate on stuff. And so the classic example is, let's say there's a breakout at $5. You don't trust your experience and you don't know so well what a good setup is. So rather than buying at $5.01, you doubt yourself and you doubt the setup. So then it goes to 501, it goes to 505, 5010, and you're like, or 510, and then you're like, oh my God, this is actually working. Oh, but is this a chase now? You're like, oh, I don't know. So then it goes to 515 and you're like, oh, this has got to be a good one. So you buy it at 515 where the risk reward and the expected value sucks, rather than having the confidence to just say, like, not just the confidence, but the comfortableness buying with uncertainty. So being able to act under that uncertainty and just say, hey, I trust the process. I trust the setup. The plan is to buy right when it breaks. I want to buy here, not there. And just being okay doing that. That took a lot of reps. But then I think it was just like cutting out all the zillions of bad habits and replace, like, a lot of trading is reprogramming your psychology and your habits. And it was just relentless. So I don't think there was anything so super specific. Okay, now let's see. I'm behind on some questions. Okay. On MS, so okay, let me touch on MSTR. Guri asked, like, if you're not able to get the size, would you ever think of going market? And if you go market, I mean, 20,000 shares, 100% would move. Like, I'm never going market, especially for the size I'm doing. I'm never going market. Like, my prices are just going to end up so much worse if I do that. Like, I'll literally just piss money out the window and set it on fire. Like, most people shouldn't, unless you're like, just don't do market. It's just not a good habit to do. One day you're going to do market in something you shouldn't, or you're going to mess up a hotkey or something, a sizing, and you're going to just ruin yourself. Like, just in general, never do market orders. I don't want to say I never do them. Like, if it's super, super liquid and I know I'm not going to have slippage, I do it. But I highly recommend just don't bother with market. So no, I never do that. Okay, what else did I miss? Let's see. One question also here from Darius. It's not that hard. I've said before, it's not that hard to get to a point where you make 10K a day. Is it possible to briefly summarize what an average 10K day might look like? It really depends on the trader. And I don't think there is an average or a normal. The way I think most people get there, though, is you just have a very diverse playbook. You have a lot of different patterns. You have a lot of different skill sets. You're scalping, you're looking for your technical trades, you're making some on breaking news headlines. So you just have a very diverse playbook so that on the average day, you can piece together these days. And then of course you're also trading with decent size. Like for me, no trade I'm doing is ever going to be under 10K at this point. I mean, realistically, I'm probably not even doing stuff under 100K. And it's like, so you need to have a diverse playbook for most people. You also need to have a decent amount of experience in sizing at that point, because not every trade is going to work. So I'd say I'd say for 10K to be a normal day, you're the average full-time person, if successful, you're probably like 4 years in for that, maybe more. I think if you're a couple years in, having a 1K average day is more than fantastic. I think 4 to 6 years is where 10K we can push for that to be average. But it comes from a diverse playbook. It comes from size. It comes from a lot of skills. And of course, you're going to have losing days and everything else too. So I've probably got another, like, I don't know, 15-ish minutes. So I know I'm probably missing questions, but let's just chat. Because I'm so behind on some of the chat stuff. Who minus Roberto has a question for me? Does anyone have something before I jump to Roberto? Let me see. Couple. Oh yeah. So Ozzy's asking me MSTR. Oh yeah. So Luigi asked, have I made more money going long or short? That's a good question. I mean, I would kind of assume. I don't know. I don't know. It's probably pretty even, because the thing is like, in most panics, I'm crushing stuff long, but I think like, yeah, I don't know. I mean, there's been, I mean, one thing that skews it is like, just this past August was like an epic long opportunity. I would say it's pretty even. Like on one side, you have stuff like MSTR, like GME, like super skews it. Like GME, MSTR, AMC are big on the short side, SMCI. But then on the long side, we've had just so many epic panics like the August one. So I don't know. It's probably pretty even. If so, Tara asked, if you do 1K now, should you be pleased with your trading? I mean, I think like P&L shouldn't deter what I say, what anyone says, what your P&L is, or anything else. It like nothing should determine whether you're pleased with your trading except how you judge yourself and your own standard and kind of how you think you should be performing. If I do 1K, then I'm not happy, but I can't speak for anyone else. I will say that, I mean, this year has had an exceptional level of opportunities. I will very firmly stand on this opinion. Well, I mean, so as a beginner, yeah, 1K is incredible. I mean, making any money at this job is incredible. It takes many years. And what I would say is I do think this year has probably been the second best, not even probably, full stop. This year is the second best year I've ever witnessed by a mile. This year to me is so much better than 2021. 2020 was even better than 2024. Like 2021, it will always be the GOAT for me because it was insane. Like if I had the capital and access now that I did back then, it would have been disgusting. So 2020 is GOAT. This is a level below, but I think 2021 isn't even close to this year anymore. So, okay, I'm going to take one more question. Then I'm going to tackle MSTR a bit. Oh, then okay, Roberto. Let me take this question, then Roberto question, then MSTR, then I got a jet. Newbie question: how to explain when upcoming events are coming up? Wondering how you know, like Apple conference call. I mean, a lot of this. So that's a great question, and I think I'm going to tackle this at some point. But there are various sources that just have like Catalyst calendars. Like Trade the News has Catalyst calendars. Trade the News, I don't think is that expensive. They do stuff like that. Bloomberg has all types of Catalyst calendars. Also, the other thing is like if you miss an event that moves a stock and you're like, oh shit, missed the Apple conference call, then you just set notes and you learn to pay attention to those. What stocks move on guidance, when do some stocks tend to report, when are certain court dates? A lot of that just comes from doing the work and following that stuff and building it up over time. If you're Googling each name, it's not going to be effective. But again, most news sources, briefing.com, I mean, there's a zillion of them. They kind of do that work for you. So I'm never really doing too much other than just following, Bloomberg calendars, Trade the News, whatever. And I also have a pod that helps out with that. Roberto, hit me, then I'm hitting MSTR, but quick.
Real quick, regarding to the trading space, Lance, how to be a great team leader?
How to be a great team leader?
Yes, sir.
That's a hard question. I mean, I think there's many ways to be a good team leader. I don't think being a good team leader, hold on a sec. Roberto already a great team leader, great. I don't think being a great team leader is synonymous with being the best trader. I think the best team leaders build a culture and set an environment and set a standard that helps people perform and achieve. I think you can lead by example. You know, when I was running an office, I mostly had to lead by example because I was doing both jobs at once. I was trading and building an office and everything else. I think a great team leader can, I mean, one big thing I think is that's important is a culture of focusing on the process rather than the P&L. A great team leader, I think a great team leader helps people share, keeps things equitable. I think a great team leader sets standards and lives by them. And I think helps make it fun. And I think a great team leader is just someone that helps the team achieve their goal. You know, some teams have different goals. If your goal is to have fun and make money, that's one goal. If your goal is to be the absolute best traders you can ever be, the team that's trying to be the absolute best imaginable, they're going to have way different standards and expectations that a team that's going to have fun. So I think it starts with like, what's our objective here? When I ran an office, you know, my objective was to build the absolute best environment for performance. I had many flaws doing that, right? Not everyone can buy into that same vision. Not everyone wants that same vision. You know, that makes things hard. It also makes things hard when not everyone is going to want to share and collaborate. Not everyone is going to do so equally. So I think most of all, it's knowing what do we want to achieve and what culture do we want. And then I think that team leader just helps people achieve that and themselves. And I think in a good team leader, ultimately, it means the individual traders are better together than on their own.
So I put so much work.
That's what I think. Yeah, does that help? But there's many different ways to do it. I think, I mean, there's also a lot of complexities too on teams, right? You get a lot of different personalities, and it's tough. Being a team leader, I think, is an exceptionally. If I can speak of anything as my job running an office, I think running an office was probably one of the more difficult and least gratifying jobs I've ever done. I do think most people, when they succeed, most people attribute their success to themselves. And I think most people, it can be a very thankless job where you get a lot of the work and headache and managing people. But then of course you benefit too. You know, like my biggest benefit from building an office was I built the environment for myself. Which, you know, didn't always work with everyone. You know, I was trying to be the absolute cutting edge best I could be, but not everyone wants that. And, you know, and that doesn't mean they're wrong either, you know, like it's just different styles, different preferences. So yeah, let's see. Okay, now MSTR, because otherwise Aussie will kill me. 1 second, let me just, okay. Check on all this. Oh my Lord. Okay. So I'm not going to go so super nuts because the thing that ends up tough, Aussie, is what is this? I don't know if you guys, I don't know how that happened on my chart. Well, maybe that was Zoom, whatever. It's tough because I don't want to go over this too much. Just here, Ozzy, here's my question for you. What questions do you have? Because I'm going to go over this anyways in the top op. So hit me with questions if you have a mic, or let me know if you don't, then I'll just spitball.
Can you hear me? Hello?
Yep.
Yeah, I guess one of the questions I had is like about this Citron short. I haven't heard you touch on that. Knowing that Carousel Capital, I think it was, had cracked this last time, like, is that something that's factoring into the EV? Like, how are you thinking about that? Because I know you touched on that the intraday setup too is like a B minus, but with all these moving parts, like, how are you kind of thinking about that?
Yeah, I mean, the
question.
Citron was definitely a plus. And I think that's astute to kind of notice that last time it kind of cracked on a short report as well. That said, like, Citron knows what he's doing for the most part. Like, it's not coincidental, you know, he tweeted on this day. Like, so it was very well timed. And I kind of think this was going to crack regardless, but yes, I think that starts to get the feedback loop going a little bit more. Like, I do think when you get something like that, it definitely can kind of help. I do think the probabilities increase. I do think the probabilities increase some. I do think the reward increases some, but I do think this was probably just going to crack and do that anyways, to be fair. But yes, I do think that was a factor, and I definitely was considering it for sure.
Gotcha. And then I guess the other question I had was on the like the second leg trade later in the day. So obviously, like, we have stuff like SMCI, which is just some picture perfect,
Mhm.
you know, like bouncy ball, but a lot of these second legs don't tend to be, I would say, like picture perfect. Like, you know, I can draw comparable to like NVIDIA on its top day, kind of had a similar.
Yeah, this
incident.
was definitely lesser than some of those, but I do think like this 440 isn't the worst. And I do think once this kind of like cracks even around here, it's probably worth being back in it, because a lot of this stuff does kind of tend to unwind further than you think. The other thing too is like, and I'll touch this in the video, and I'll also touch on it now. Like, the options were like, I think ever since SMCI, options have just been on some of these single names have just been structurally more expensive and stuff like this. So like, I don't think you can get any of the crazy skew that was available on SMCI. Like, I did play this with stock end options being long the puts. But you like on this later leg, some of those probably went up maybe like 4 or 5x. But you're also to some degree kind of not fighting. You're kind of playing with fire just because vol was pretty damn high. And you know, these can go to zero so quick. Like, if this fails and we bounce to like 440, all those zero DT, or not zero DTs, but all those options are just pretty much zero at that point. So I felt this, I do agree with you that I think this stuff was not as good as some of those other setups like SMCI. But it's not the worst to go for the 440 or potentially add, you know, through there.
Gotcha. Thank you.
Yep. Yeah, and like the thing was like, it's so hard because, oops, you know, on some of this stuff, like even when this was cracking, I was almost thinking like, oh my God, like, because the puts were so expensive already, like it was almost tempting to sell puts against the stock that you're short, just because vol was already just so expensive. So anytime you're thinking about that, it really makes it kind of tough. So then another question, wondering the risk difference we might have on the initial breakdown versus that second leg breakdown. By second leg breakdown, like, so this leg, like, if once it's breaking down, I feel like it's probably going to go, but nothing's going to be close to as good as up here. Like, the amount of meat on the bone up here is so enormous, and everyone's looking for that. Like, when you're all the way up there, there's so much room for this to collapse. That being said, I do think, again, I don't think this set up so well, but I do think a lot of people write this off and think this can't keep on going when, again, like, and that was the part of the beauty of SMCI was like the options were just not pricing in the potential for another leg at all. When I think some of the 400s were still like, even in here, I think the 400s were still a couple bucks or more than a couple bucks. And like, yes, it did increase a ton, but yeah, you couldn't make the same super asymmetry. But that being said, I do think too many people write off this leg. Like this is like, crap. So many people think the move has been made. Anytime after something like this, like we had enough consolidation. This even happened in GME that one top day. Like anytime we kind of consolidate for hours, you want to be paying attention. I also wish this overall consolidated a couple, like I wish I could shift all this lower. Like, so I wasn't like super confident and super in love with this, but definitely most people totally write it off when they shouldn't. Only a couple minutes, then I got to jet. Any final questions? Sorry I had to cut this a little bit short, but I mean, we covered a monstrous amount at the end of the day. Oh, so then, yeah, that 1120, felt like it could have, should have cracked, but it didn't. Yeah, so here's the thing, to Darius's point. Let me see. Then I actually do got a jet on this. Like, if we like it here, you can't ever exhaust yourself so that you can't live to play another day. Because the thing with mean reversion is all this stuff gets better the more it goes. And so if this was an A this day, it's an A+ if it goes more. The other thing is this never truly went backside. We always just kind of held those higher highs and higher lows. So you always want to avoid fighting this because then you're still around to really hit it. Let me see. So Drew wants magnum opus before Christmas. I would love that too, because I am extremely tired of working nonstop. But sadly, no. So, okay, what you guys are going to see is I'm going to be announcing the official release date, 1/21/25. The pre-sale is going to either start next week or the week after. Then that's going to come with some just basic access. I'm hoping to set up some community features. I'm hoping we're going to get some of the. So yes, so when you sign up, there's going to I think we have 6 intro videos up right now. So the sneak peek will be if you buy and log in, you're going to see the intro videos. We're going to be just trickling some in over time. Am I still going to be doing meetups? Yes. As part of that same elite package, I'm going to actually my meetups I want to do even more of and make them even better. So I'm probably going to do even more special cool stuff, giveaways. Maybe we'll go to some fun sporting events and other cool shit. So I plan on doing a lot of that stuff on steroids too. So yeah, there's going to be a lot of awesome stuff. I do need to jet now. It was a pleasure. These always get more and more. and Drew, actually, Santa Lance is funny because just you wait for the pre-sale video. There is literally a Santa Lance delivering some goodies. So thank you all for your time. Happy Thanksgiving. Amazing questions, amazing participation. Can't wait to, trust me, when you all see Magnum Opus, it is everything we do on steroids. I'm going to try and add all these community features. We're going to be doing more meetups. So appreciate the support. What a wild ride. Patreon proved that this was the model to go for. So thank you all for being part of what made this happen and can't wait to continue this. We will have one final Zoom in December. So then I'll make sure we have tons of time. Thank you all for the awesome participation and can't wait.